Sprott Physical Uranium Trust does one thing. They go long, they're buyers and they're holders of physical uranium. Since they started, the price of spot was at 30, and it actually moved the spot price to almost 45. So now with 2.5 times more firepower still to come, I'm not sure what the price will do, but I can tell you there's going to be massive upward pressure on it.
Today's guest is a supporting sponsor of Liberty in Finance. Welcome back to Liberty in Finance. We have a returning guest. Jim Paterson is the chairman and CEO of ValOre Metals Corp. He joins us this Tuesday, December 7th, 2021. Jim, thanks for coming back on Liberty in Finance.
Hi, Duncan. Pleasure to be here.
We're always grateful for your visits here. You've talked to us in the past several times, and one of the things that you talked about on previous visits was how investors in ValOre Metals Corp get a couple different types of metal involvement, both because of your assets that you're exploring in both the platinum and uranium side, and both of those have gotten some attention in the markets recently. Could you talk to us about that power of diversification?
Sure, absolutely. So first and foremost, the company ValOre is an exploration company. So we're advancing these projects from discovery, and the goal is to get to feasibility. From a commercial perspective, we measure our success if a larger mining company likes what we've done and makes a bid and buys our project from us. And thus, that's a way that we can provide liquidity to our shareholders. So we currently have 2 main projects within the company. And from 2019 up until about 6 months ago, we really were focused on our palladium platinum project, which is called Pedra Branca in northeastern Brazil. But based on that diversification you were talking about, the company itself was formed to explore uranium projects. It used to be called Kivalliq Energy. We spent over $55 million on a uranium project that the company still holds called Angalac in northern Canada. And really, there was no interest level in the investment community for uranium for many years, actually after 2011 until just a very short time ago. It was total apathy. So we continue to hold on to this uranium project, deeply discounted value within the company. And then we acquired this palladium platinum project. And for the last couple of years, have been focusing on that. Recently, the entry of a group called Sprott Physical Uranium Trust, has actually driven the purchases of spot uranium to a level that has not been seen for over a decade. And that's been driving interest in uranium and, of course, uranium equities.
Yeah, I wanted to ask you about that because we've talked with Rick Rule from Sprott Asset Management. Actually, we're going to have him on again this Friday. And wow. That scuttlebutt has been around for, almost a year, maybe very intensely for the last 9 months or so. And that's about what Sprott did when there was interest this year with the silver squeeze, et cetera, starting in January in the silver market and the Sprott Physical Silver Trust. What he's been on specifically talking about how they basically drained most of the North American available above ground silver supply of COMEX eligible silver into their trust at one point. And but there was talk about, wait till you see what happens when they start gobbling up physical uranium interest because of what it's going to do to uranium, which is a much more limited market. Could you give us an understanding of what Sprott's activities in their forming their new physical uranium fund has done to supply and pricing in the uranium market?
Yeah, it's significant. And in fact, I don't think anybody in the general market really understands the significance of what will happen. I think there's lots of people that love uranium, but those people, like relative to other groups of investors, is actually a tiny little group. And the understanding is, I don't think there yet. So Sprott Physical Uranium Trust does one thing. They go long, they're buyers and they're holders of physical uranium. And that's different than, for example, a nuclear reactor buyer, for example, who would buy it and burn it. In the reactors. That's different than a trader that might buy it and sell it. They're not a hedge fund, so that means that if the uranium price goes down one day, no one's calling them for redemptions. Sprott isn't going to panic and pee their pants and have to sell their inventory to somehow raise cash to pay people back. So they literally are a buy and hold forever kind of thing. And so that's quite different. So what I understand is that their MO is they really have maximum flexibility. So if they wake up in the morning and they decide they see some inventory for sale, they'll just go buy it. And they're not inhibited by amounts of dollars that they can spend. It's almost limitless. And when they buy it, then they put it away. So that's completely different. That's a very new tiger in the cage. And I think it's going to have huge ramifications. Just to give you some numbers around it. So when they first came up, effectively what they started doing, they started managing a company that used to be called Uranium Participation. And they basically took over that company and the management of the uranium for that company. In their new capacity, they've demonstrated significant strength and much more than the previous managers. So they've really taken it to the next level. So initially what they did is they announced that they'd be doing what they call an at-the-market financing. And just so people understand what that means, it means when a public company does an at-the-market financing, they call it an ATM financing, they actually issue stock, or in this case, units from Treasury, and they sell it into the open market. So if there is trading in the shares or the units of Sprott, some of those shares that are trading are actually coming directly from the company, and it's what they sell those shares in exchange for cash. And all of the cash that they generate from the sale of those units is used to buy physical uranium. And so what they announced was a $300 million deal. At the time, spot uranium was sort of in the 30s. They had so much success that they announced that they would increase it to $1.3 billion. They had so much success that they recently announced that it's going to be $3.5 billion. So currently, from what I understand, or the last time I heard, they'd only deployed 900 million of the total amount. So they still have almost 2.6 or 2.5 billion, so 2.5 times what they've already deployed. And just for understanding, since they started, the price of spot was at 30, and it actually moved the spot price to almost 45. So now with 2.5 times more firepower still to come, I'm not sure what the price will do, but I can tell you there's going to be massive upward pressure on it. And the thing that I think, if you just look at human psychology, if you were a buyer who actually needed to buy uranium to fuel your reactor, and you just heard that these gun-toting dudes with huge firepower were going to start to mop up all of the inventory, I think you'd be motivated to buy some yourself first before they did, and sign long-term or mid-term contracts so that you would not be left with a reactor that had no fuel. So I think what it's going to do is just drive this complacency out of the market for the fuel buyers. The ramifications will be massive. And so what happens is there's like 20 companies in the world that actually have high quality uranium projects. And when the price of uranium goes up, typically those price will go up. A whole bunch of new uranium companies will get formed to take care of all the ebullience. But I think you should just be really careful. Just look at it to see if they've actually drilled any uranium, or if they have a resource, or if they just putting uranium in the name of their company to take advantage of the marketplace. But the reality is uranium companies get affected dramatically when the price goes up or down. And I think right now, based upon Sprott's entry and like massive power wading into the market, into the spot market, we're going to get upward pressure on the price. And I actually feel incredibly hopeful. We've taken advantage of it already. We just did a $11 million financing. So we're fully funded for exploration on our uranium project next year in Northern Canada. So we don't need to raise money, but I think we still will benefit from the fact that the audience grows when the price goes up, when the liquidity goes up, the interest level goes up, and the audience grows further still. So I think it's going to be a pretty awesome end to the year. And I think 2022 is going to be really very positive for us because of that. And we still have our palladium project, which results are still coming. So it's going to be it's really a positive time for us.
Yeah, that's what I was going to ask you was what are the direct impacts on your exploration operations and prospects in the context of this kind of a market that's suddenly being reinvigorated and getting new movement? And what it sounds like is it's not that you needed the market price to move in order to get financing. It sounds like you already have financing, but the other impacts are you already enumerated some of them to ValOre. Maybe you can just make sure that we understand exactly what the impacts are to ValOre of a rising uranium price and to ValOre investors.
Well, we have to be honest and say we're still an exploration company. So if the price goes up today, it's not like we're mining uranium and selling that into the price. But it just inevitably happens that even exploration companies that have the word gold in their name, if the gold price goes up, it's better for them than if the gold price goes down. That's just human psychology. So in the case of the uranium equities, the exploration companies out there, when the price moves up, it's just amazing where all the buying comes from. There's huge volume that's generated. I'm not exactly sure where it all comes from, but it just comes and it affects all of the uranium companies. Liquidity rises dramatically. Upward pressure happens in all the stocks. The bankers get all excited and offer you money. And that's just how it is. It's a cyclical thing. And right now, I think we're entering into a period where there will be a big push. And I think that it'll all be based upon the price.
Jim, if people want to find out more about ValOre Metals Corp, where's the best place for them to get plugged in? ValOreMetals.com. And at the homepage, they're going to find out stock information, investor information. We'll put some of the details in the description of this video, but nothing like the details that they can find out at ValOreMetals.com.
There's contact information, and we have detailed information on every one of our projects, all of our news releases there. Reach out to us. We love to communicate with people, so we hope you follow along.
Well, Jim Paterson, Chairman and CEO of ValOre Metals Corp., thank you for joining us again for this visit on Liberty and Finance.
Thank you, Dunnigan.